Hello, everybody. John Blank, Zacks Chief Equity Strategist and Economist. And today is Monday, July the 29th, 2024. And our discussion in our long-going series on top stocks is now in the construction industry. It's great, timely discussion. The home builders are in here. The cement providers for the infrastructure plays are in here. All kinds of different air conditioning players, United Rentals. We've got all kinds of names that are hot stocks in this infrastructure-led environment and the home building environment. So, as usual, we'll go through this into three parts. We'll do the top stocks by market capitalization, the biggest ones. Then we'll do the top stocks by the number of analysts that are following it. Want to see Wall Street interest on the sell side to the buy side. And of course, the Zacks Rank core tool, the largest 1 month percent change in the current fiscal year 1 EPS estimates. So this is our typical structure. And for this industry, particularly, it'll be very clean because a lot of these players are quite big and quite international. So if you're looking for international stocks, here's another play because either they have revenue coming from abroad or they're actually listed abroad. A fair number of these are those types of stocks. So our disclosures, these are my views. I do have a PhD, and they're not necessarily the views of Zacks Investment Research. Of course, we always go through here to the top stocks by ticker, company name, and market cap. Okay, here's your tickers. Here's your company names. There's your market cap. And of course, we only have two industry codes here. Building products, number 28, and construction building services, 29. Construction building services largely will be your home builders. Building products can be all kinds of stuff like Otis, Martin Marietta, which is cement, Weyerhaeuser lumber, of course, and things like Heidelberg Materials, which would be your cement provider in Germany. Plenty of names you probably don't know about. CRH is enormous. They are the largest cement provider. They just listed in the United States. They're basically an Irish company. Huge U.S. holdings. Very much a play in this environment. So over here, we've got Trex, which is decking materials, for maximum number of analysts, Lennox and Trex, though that's your air conditioning. And this Masco is into infrastructure like fiber optic things. So here you can see from a number of analysts versus the largest companies, certainly an overlap. But over here, you're going to get the names that are more active, not quite as big as over here, because this is the market cap one. And of course, in the middle is what's going on with short-term upside revisions. And again, you're going to see times where these industries companies get played out into both or all three areas. So for example, I hear about MCOR, 17 billion here, MCOR says down here. And of course, can we find MCOR around here? The answer is surprisingly not. But MCOR will be a name that we'll look into quite dramatic performance because MCOR is in construction of these infrastructure projects, and it has really been a name that has worked quite well up to this point in time over the last year and a half. Okay, so to start off, we got to go through housing and construction from a macro perspective. So I got 4 time series, and then I'll follow with 3 more. First, of course, average home prices, as you know, skyrocketed during the QE performances of the Fed from 20 to 2022. Then the Fed put the brakes on with the interest rates, and they have gone sideways. If you do the median sales price, you do get a decline. The average sales price, not so much. So definitely taking the high end down versus average home prices not moving around too much. I think this one may be your most interesting chart. Houses for sale are going up and up, but the houses sold are going nowhere. So this has become the story of a very different housing market than we've seen ever before. These numbers usually move together. You would think that if houses for sale are going up, at some point this would start to go down, and it's gone sideways. So people are really not selling a lot of houses in this market. It's been the same level of house sales for 6, 7, 8 years now, very much a sideways motion on houses sold, but houses for sale are going up. One has to wonder about when this and this go on, and I'm sure it's all about this and people waiting out this huge move in price, and the interest rate environment has really snapped this market from how it was to how it is now. Very different. All right, so over here, new private housing starts, building permits and sold. Going to give you the same story of how things really got moving during the COVID pandemic, and then of course they got sideways motion back to where they were after Fed started rate hiking. So, to no surprise, you're going to see that type of pattern here. Down here is where it gets interesting: non-residential construction. So the passage of the Infrastructure Act really took total construction of non-residential up. That's the line. You could see it went from this 800 number to 1.2 million. So it was a 50% rise in a year and a half, 2 years of this construction number. So it came along, non-residential construction, at a time when residential construction had started going sideways, not down, but sideways. So it wasn't either or, because this was fiscal policy driven and this was monetary policy driven. So it was, in some respects, quite different. But of course, this really helped kept the growth going that the Fed was taking away through the housing market channel. So again, keep in mind, these are our top areas. This is always going to be your place you want to come back to. It has the stickers, the market caps, and the overall structure of these three areas. Keep in mind, this is your go-to slide. And of course, the rest of this, the macro, is key. So now let's get to the top stocks on market capitalization. Return on equity. Of course, this is going to be really critical for this business. And some of these companies are super profitable. Some of them are not. Of course, down here, Lennar, and then the Lennar B shares, of course, KB Homes over here. You're going to see NVR, which is another one, Pulte Homes. Howlett is actually in aerospace. So when you get a home builder, you're going to get a return on equity a little lower than something like a Sherwin-Williams or a URI, which is just astonishing from a return on equity perspective. And Owens Corning, same kind of thing. You're seeing a much stronger number than, say, a DH Homes or a Pulte Homes or a Lennar. So I think, generally speaking, this is a good start, showing you particularly in, for example, I talked about MCOR, showing you the ROE of MCOR coming out of the pandemic was just an astonishing rise, and a lot of that's already been priced into the stock. But MCOR is typically one of the best stocks to have bought for the infrastructure play over the last 2 or 3 years. All right, revenue forward 12 months. Again, CRH, you probably don't know that ticker. CRH is the ticker, CRH is the company. This is in Ireland, and it's a big cement provider. URI is United Rentals. Otis is the elevator company. Vulcan Materials, Weyerhaeuser. Martin Marietta, which is down in Raleigh, North Carolina, they're also another cement provider. So you're going to see here, generally speaking, nice trend performances out of COVID. They didn't really suffer too much. Over here, you're going to see some, downturns, of course, during the construction pullbacks during the COVID pandemic, but they recovered smartly. Some of them, OC, Owens Corning, insulation, just doing extremely well. We've owned that in large cap trader until quite recently and did quite well with it. Over here, you can see the home builders have really done nice from a revenue perspective. There's really no question then, and they have also been priced in quite well, but they should. And again, we just want to look for these fundamentals being confirmed, and of course they are. No question about it. Toll Brothers is a high-end home builder. You can see here the early going of the interest rates took their business down, and then they changed their business model and got it back on track, probably by offering rate buy-downs, things like that. So very interesting market. But man, Toll Brothers, when we saw that median home price collapse, this is where Toll Brothers plays at a high end. Okay, enterprise value to free cash flow for the top stocks. Now, again, these are noisy charts. I don't necessarily think the charts are of much help, but the order is of help. Highly valued versus less, more cheaper stocks. You want to come here to set up an understanding of whether these stocks are cheap or not relative to their free cash flow. Enterprise value, of course, a little better metric because it's comprehensive of debt and equity.
And you can see a really nice period. For example, Sherwin-Williams is pretty overpriced. Weyerhaeuser is priced similar to it. And then down here, you've got CRH, which is that construction provider. They're not going to be as priced as well as the REs are lower. It's a different business, it's a cement business. But here, like I said, I circled the red because charts are generally not as helpful. CapEx, really interesting to see some. You want to just basically confirm people are building businesses here. Here is a very nice period because URI really suffered during the pandemic, but they came back strong in the construction boom. Sherwin, Vulcan Materials, and Martin Marietta all going up with it. So you can see that the CapEx there, we were expanding our business with CapEx and doing quite well under it. Down here, you don't see as much of this in the CapEx space for these big groups, but they're certainly now going down. And of course, Owens Corning, getting a huge bid right now for CapEx, as you might expect, because of the insulation business. Around the country, residential, non-residential, new homes or old homes, insulation's been a big play for getting the heating costs and air conditioning costs down, particularly in the South. Okay, so reinvestment rate, not terribly important. Just want to show you that due to the nature of outside lending importance in this business, these are typically very low, just so keep that in mind. And of course, we get earnings pureness, I'm going to skip. Total debt, which we can get through just from a balance sheet perspective, and how much people have. Depreciation, amortization, of course, not very relevant. So on to the part two, which is our top stocks by the maximum number of analysts. Okay, so again, nice chart here to start off with. Look at all these nice upward motion charts. There's really not any indication that this hasn't been the strongest sector to invest in the last 2-3 years from COVID out. Again, a lot of this was fiscal policy driven by infrastructure packages like EMCOR. Look at this. EMCOR went from $100 a share in 2023 to $400 a share. EMCOR, 4 times your return in a year and a half. Just a phenomenal stock. KB Homes, similar story. New home builders, once the rates got picked up, they had some more play. Could offer properties with other people were not be able to, and they did quite well. Fluor, of course, that's the international player. Look at how nice those earning estimate revisions are. So as you can see here, there is support from the underlying estimate revisions in all these stocks. And they tell you that the upper revisions were supported and the price movement was correct to the fundamentals. It wasn't a bubble. It might be a little of an issue down the road when the underlying fiscal support goes away. But at this point in time, it was a great trade. Net margins, of course, you see this all over the place here. Like Lennox is at 12. DH Horton is at 13. Some of these KB Homes at 10. EMCOR, surprisingly, very small margin, only 5%, but they just grew their revenue so strongly. Fluor, of course, really low, 2% margins, incredibly low. Over here, Trex, that's at decking and materials, super strong company, not a very big one, but very, very profitable. And Howlett Aerospace has been doing quite well from the margin perspective. Really like to stop here and make sure I understand how businesses work across industries. Some of them are more profitable than others. It's usually a good stopping point to understand. All right, return on capital. Okay, you'd like to see a higher return on capital. It's kind of a measure like return on equity. And of course, here you get EMCOR, like I told you, really taken off. Just doing surprising or shockingly well, but not surprisingly well because of the infrastructure build. So again, all these numbers down here in building services, the home builders, and infrastructure products really doing quite well. But that's not to say groups over here have also, like CRH, little lower return on capital, of course, because it's cement, but doing quite well. Fix, of course, in Lennar or Lennox are your air conditioning plays. Get a lot more play out of air conditioner than you do out of cement. Of course, that's sort of obvious when you think about the business types. All right, price to sales ratio. Again, like enterprise value to sales, we just want to look at whether there's too high or too low. You're going to notice here, particularly out here with the home builders, that price to sales is actually quite low. This is typically the case because people don't like to get into these stocks and get burned by them. So you can get a 6.5 out of Trex, but a 1 down here for DHM or KB, just incredibly low. Floor, of course, is super low profitable, high infrastructure price. Low price to sales, even lower than the home builders. Fascinating to look into these stories and understand just how different they can be. Howlett, of course, that's aerospace, and you can see it has gotten a big, just on a valuation perspective for a stock run. I'm sure that's a lot of it because of the airline businesses that underpin it. Dividend yield, of course, again, here we're just looking to see if there's really any strong dividends on for sale to the 10-year treasury. So you'd like to see this above 1 to give you a play. And you're seeing a few of these names in play. Some of these you may not know as well. AMBP, there's Martin Marietta, MSM, PKG, of course, that's packaging materials. Less than 1, not much of a dividend here. So again, look here, if you're just looking for an income perspective, you'd like to be above a 1. And some of those names are out there for you. So keep that in mind. Dividend yield to the 10-year treasury, by the way, not just dividend yield. CapEx to depreciation. Again, you'd like to see somebody really building a nice business and running it up. Floor, of course, is doing quite well here. And then, of course, Trex, like I told you, really showed up. A little bit of a downturn during the rate hiking started, but they came back strong after that. Interesting pattern for CapEx and depreciation for Trex. In general, though, you can see all these names are trending upward over here, and they're pretty stable there too as well. Okay, total debt to capital, we're going to skip that, but moving on to our final section, which is, of course, the Zacks Rank stuff. We stop here. These are the more 1 to 3 month type of stocks, but we'd like to see some of the same names we saw in market cap and largest number of analysts in this area as well. So let's take a look. Okay, earnings before interest and taxes. So you'd really like to see people piling it up and making more and more money. And of course, EMCOR, there they are. But also KB Homes, doing quite well. Floor, of course, infrastructure internationally doing quite well. Aspen, again, had a really big downturn, came back really nicely. Fix, of course, it's air conditioning. Again, those air conditioning players did pick up speed during the last year and a half. Really interesting stories, always more complicated when you get into this type of measure. Cash flow yield, of course, again, this is kind of a profitability measure, kind of like return on equity. And again, you're going to see differences by industry quite dramatically. So again, it's really about the number, not the chart. And that gets us to price to free cash flow, where I actually have circled these valuations. Because again, what you're really looking for to start here and then go back to the tables or the pictures, but really it's the rankings here that are critical. Again, remember, this is building products up here. This is construction building services down here. So there's only 2 industry groups in this sector, and they line up really nicely for you when I circle them and put them together like that. Enterprise value to sales, of course, this incorporates debt. So these numbers are going to be a little lower or much lower than those. Price to free cash flow is only the equity portion. This is a much more comprehensive, and also to sales. So again, you'd like to see where things are overvalued and undervalued. And if you're getting less than a 1, of course, these are going to be some of your home builders and not necessarily the other players like Lennox, which is 4, which is KB Homes, which is less than 1. Of course, like I said, you have to keep in mind what the industry is and compare it to its other members of the industry, and then frankly understand their business as well. It's not as simple as you might imagine. Again, we're going from the economy, which we started with macro, through market cap, through the number of analysts, through to this business, and it all has to line up for giving you a broader dimension of these stocks and how this whole business works. You got to remember, 50% is whether you're in a bull or bear market, 30% is industry, and only 20% will be picking the name in terms of the alpha and beta that you're going to get out of these stocks. All right, total liabilities, not too helpful. Quick ratio, also not too helpful. So that's it for me. I hope you enjoyed today. Really an interesting business. I think you'll agree with me, really a timely business and really actually quite well constructed charts in this industry because the fundamentals really do matter. It really is a good way to start your week, taking a look at these names and getting a comprehensive look. Like I said, it's about the industries and the economy. It's 80% of what's going on in stocks, folks. The other 20% is picking the stock that is going to be represented and get the rest of the 20% out of it. So give us a call, 866-794-6065. Send us an email, strategycall@zackspro.com, or find us on the web, www.zackspro.com. We do have a LinkedIn page at Zacks Professional Services, and we do put up Twitter feed comments at ZA Tools. But of course, easiest way probably send us an email at strategycall@zackspro.com, or find us on the web at www.zackspro.com. And finally, like I said, 866-794-6065. There it is, though, folks. There's the email. If you want these slides, come back to us and let us know. We're happy to send them out your way. Again, thanks for joining me today. Top stocks in the construction industries. I found it fascinating and a really useful use of my time. I hope you find it was a useful use of your time. Thanks.